Good afternoon. My name is Rudi, and today we're going to do the full training session basic 2, but it's going to be on CFDs. So first of all, before we start with the actual training, or this is part of the training actually, what is a CFD? How does CFDs work towards how equities work? So first of all, normal equity, for instance, works on a 1-to-1 ratio, which means that if you go and trade a R1 share, that would be equal to R1. Okay, if you go and trade a CFD, okay, let's say this was, for instance, ABG. All right, so ABG pricing, let's say it was R1 per share. So it's a 1-to-1 ratio. R1 per share, you would be paying R1 because it's a 1-to-1 ratio. Okay. Now, if you are trading on a CFD, so let's say you take ABG, the same share, and the ratio is 1-to-5. Okay, so then it means that that R1 share would be worth R5. So what it then means is if I go and say on a 1-to-1 ratio on a normal equity, and I put in R1,000, that R1,000 would be worth R1,000. Okay, if you do a CFD on the other hand and you put in R1,000 on that 1-to-5 ratio, okay, that R1,000 would be worth R5,000. So that you call exposure. Okay, so that would be R5,000 worth of exposure on that ABG because of the ratio being 1-to-5. That of course means that your risk to reward ratio is higher. So here you've got a 1-to-1 risk to reward, you've got a 1-to-5 risk to reward. So you've got a higher risk but also a higher reward rate, which means that if you, let's say, make on a share, on ABG, for instance, you make a profit of, let's say, 10%, okay, on a normal equity, then your profit would be R100. If you go and trade on a CFD, because you're trading with a R5,000 exposure, 10% on that would be worth then R500. So you would have a higher reward ratio. But also, if you lose 10%, you would be losing R500. Okay, so you would be sitting in a minus 500 if you lose on that 5 ratio. If you lose to a 1-to-1 ratio, you'd only be losing R100 if it was a 10% loss. Okay, so 10% gain, R100, 10% loss, R100. 10% gain on a CFD or with a 1-to-5 ratio will mean that you would make 500 but lose R500. Okay. So also another thing that you must know is that it doesn't only work with a leverage. So this you call leverage, okay, a 1-to-5 leverage or gearing ratio. Okay, you also pay a marginal price per share. So you're not going to pay full price per share. So let's take ABG once again. So ABG with a 1-to-5 ratio will mean that you would be paying 20% of the original price. Okay, if you have a 1-to-1 ratio, that means you're paying 100% of the price. Okay, and the higher that goes, so let's say it is a 1-to-2 ratio, then it means that you're paying half of the price. If it's a 1-to-3 ratio, then you would be paying 33.33% of the price. If it's a 4%, obviously a little bit higher, like in the 40% if it's a 1-to-5. It's going to go lower. So it's going to go down to 20-something% and then 20%. Okay, on a 1-to-5. If it's a 1-to-6, it's going to go higher. If it's let's say a 1-to-10, then it means that you would be paying only 10% of what the price is. Okay. So it will go lower and lower and lower the higher your ratio is. Okay. So in this case, let's say it's a R1 per share, you would only be paying 20 cents per share. Okay, because the 1-to-5 ratio, 20% margin, and that would give you 20 cents per share. Okay, so then how your profits basically work is, so once you, let's say you put in R1,000, your exposure is R5,000, so that's your exposure. Okay, so it means that the bank or the institute that you're trading through borrowed you 4,000 Rand. So once you sell out, what would happen is it would be 5,000 minus the 4,000, which would give you back your 1,000. Okay, so if you made a 10% on your 5,000, that would be added onto your 1,000, which would give you 1,500 Rand. So you make your main profit off of the 5,000 Rand exposure and not the 1,000 Rand that you put in. Okay, so that's the basics of how a sorry, a CFD would work. Okay, is you've got basically two amounts to worry about. Is what's your ratio on your share and what's your leverage or margin. Leverage or gearing. What's that, and also what your marginal percentage is. But obviously, the software would show you what your marginal percentage is. Okay, and if you're trading through Standard Bank, for instance, okay, every share would differ. Okay, if you take, for instance, SSW, will have a ratio, for instance, of 7.6. If you take TCP, it can be lower. It can be 3.6. Okay, so that's just basically all you're going to do is just going to put in the 1 in front of each. So it's a 1 to 7.6 ratio, 1 to 3.6 ratio, but they give you the gearings. Okay, so they will give the gearings of each and every individual share. If you're trading through, let's say, IG markets, for instance, they work on purely on the marginal percentage. So it can be something like 20%. Most of their shares work out on 20% that you would pay on what the price is. That would mean that obviously it would be a 5% leverage. Okay, so when you put in 20% on your margin, it will automatically go to 5 on your leverage. Okay, but if you put it in a higher amount, then obviously that would go down. Right, so the higher that is, the lower your percentage would be. Okay, something like a 7.6 would give you 13% or 13.3% margin percentage that you would be paying of the original price. Okay, so let's go into the software, and we're going to start on our trader dashboard immediately. So the trader dashboard is more or less the same as what your investment dashboard is. Okay, so investment dashboard looks the same as what your trader does. So this is our current CFD portfolio that we're running on. So it would give you more or less the same layout with your account balance, the money that you've got left in the account, your profits and your losses, so your income, your expenditure. So in this case, we'll see that our income is more than our expenditure, so we've made profit. Okay, if it was a loss, it will say loss and take and make this red. It would go below. So like for instance, like on this page here, you'll see that it's a loss. Okay, so if I go into my trader dashboard, here we made a profit. Okay, on the right hand side, there's our market value. So this is all the shares that we currently have with all their market values, what they're currently sitting at. And then below that would be your accounts. All right, so your CFD simulation or new CFD simulation, depending on what you name your account. Okay, if you don't have that account, first of all, how to create that? You're going to go to your account, go to manage accounts, and then underneath manage accounts, go to select your go to account type, select your trader account, and change your give it a name. So let's say, for instance, CFD simulation, and then give it 100,000 or whatever amount you would like, but I would prefer putting on 100,000, and then also select your account opening date, which is, let's say, for instance, today's the 14th. We click on that and then say create, and then we'll create that extra account for you. Then when you go to your trader dashboard, you will have that account. Okay, if you don't, it will just keep on turning and turning until eventually it stops turning and show you that you don't have any accounts. Then you need to go and create that account. Okay, so show your account name, your market balance, your cash balance. All right, so cash balance is basically what you have left to go invest with. Your market balance is but your investment value plus cash balance gives you market value. So that's my investment value of how much money I've spent out of my market balance. Total margin cost, so that's my current margin cost that I've paid in total so far, 6,656 Rand. So we've basically got 1,000 Rand on each and every one of these shares. All right, marginal pricing. And then our growth is currently sitting on 1,148 Rand 25 cents. Okay, so it will give you the code of the company. the direction, so long and short. So that's another thing that you must get used to, is that with an equity you can only trade one direction, that's up. Okay, we call it a long. All right, if you trade in a downwards direction, you call it a short. Okay, so up is long, down is short. So it's not long term or short term, it's just the direction. Okay, so long is upwards direction, short downwards direction. So you can trade both directions, but I'll go and show you where to go and find the your shorts and where to find your longs now on the advisors. Okay, so you can make money in both directions. You don't need to stick with only shares that's going in the upwards direction. You can even choose shares that's going in the downwards direction and make money with that. So it works more or less the same principle than what Forex does. So Forex, if you try trading, for instance, let's say the USD versus ZAR pair, okay, if you put in a buy order on that pair, then it means that you are trading for the US dollar. You're saying that the US dollar is going to go up, but the rand is going to go down. If you put in a sell order, then it means that you're saying that the rand is going to go up, but the US dollar is going to go down. So you're trading against the dollar instead of for the dollar then, if you put in a sell order or a short. Okay, so you will be able to do long and short on the simulation as well. You've got your quantity, the amount of shares that you bought or contracts that you've taken out. So that's another thing. You don't physically own the shares. All right. So if you're doing equity, you physically own the shares. Okay. You are an investor. You are a shareholder. But if you're a trader, you're not a shareholder. You're a contract holder. So you only have the contracts for those shares. You don't own the physical shares. The company that you're trading through still owns those shares. Okay, so those are our amount of contracts that we currently have. Unit costs per share, so that's what it basically costs us. Let's say an INL costs 85 Rand per share, and then with that's our current price of 91 Rand per share, and then our margin was 1,018 Rand. Now this margin, all of these shares are worked out on a leverage of 1 to 5. Okay, so it's a 5%, a 5 on gearing, which means this, for instance, would have been just over 5,000 Rand worth of exposure. Okay, same with all these other shares. So all you do is you take that amount times it by 5, and that would be your exposure on those shares. So it doesn't show you what your exposure is on this page. Okay, but that would be your exposure. That doesn't show to you once you go and buy a share, and you're on the buy page, it will show you what your exposure is. All right, so just take note of that. Then what your current price is, your movement for today, but obviously this would be for yesterday because the markets are closed over a weekend. So this would be yesterday's movement, and obviously this is in cent value. Okay, so just take the decimal away, so that would be 1 Rand 25, 1 Rand 83, 6 Rand 37, 23 cents, 33 cents, and 2 Rand 45. Okay, so that's our movement. And then overall movement, so that would be your percentage. So 5% growth, 6%, 17% growth, 0.67%. This is 0.0. We haven't made anything. We're just back on 50 Rand, so 50 Rand brokerage. We haven't made any percentage growth, and 9.48% growth. Okay, so we've made good growth within this week. Then your profits and loss in Rand value. So this is Rand value. And just remember, today's movement would be in cents. Okay, just take away the decimal. Okay, this is with the decimal, with the cents. So it's 266 Rand and 69 cents. Okay, 96 cents, sorry. And then on the right hand side, you'll find your action where we will be working later on. Now we want to go and buy some shares. Okay, so I'm going to go and create an extra account for this trading session. I'm not going to buy it on this account because this is what we're currently having an eye on the Telegram group. So this is a page that we will be putting on the Telegram group now and then with new CFDs and the current CFDs that we're trading on. So I'm going to go to our accounts, manage accounts, and quickly create a new account. So let's go to trader accounts, and we just call this one webinar. 100,000 and then today's date, and then just say create. Okay, so now we've got a new webinar account which we would be buying from. So if I click on this account, we'll see that it's a clean account. Okay, so nothing underneath this account. Okay, investment summary for webinar. Okay, so we're going to go to analysis and then stock. So we want to go and select shares now, all right, from the additional advisor. You're not going to use your share filter for it. Don't use share filter for your CFD trades. You're going to really struggle to find any good CFD trades on your share filter. We're going to go to additional advisors. Obviously, there's there's going to be two different methods, or three different methods. One would be the SMS notifications, which is called the stock picks, or you can go to the Telegram group and go and select shares from there as well. So we'll be posting shares on the Telegram group from now on. So those that aren't part of the Telegram group, please send me an email with your name, your surname, and your contact number to rudy@sharetrackin.com or media@sharetrackin.com, so that I can add you onto the Telegram group, because that would be really important for your CFD trades if you want really good CFD trades. Okay, but for now, we're going to work on the Sharetrackin 2020 Advisor, which is given to us. Now, the Sharetrackin 2020 Advisor basically has already got some calculations in it, so you don't need to go and add a stochastic or a RSI or a long and a medium term, nothing like that. You only add the Sharetrackin 2020. I'm just going to click on that. And then underneath the Sharetrackin 2020, you've got all your shares, so same as yesterday's webinar. So your code, your name of the company, the closing price, so that's the closing price for yesterday, the volume that it's been trading on, and then your if you can open a position, and then also your direction which you need to open the position in. Okay, so first of all, volume is a very important thing. So we're going to filter out on the volume. We want all these lower volumes we want off of this list. We want to give them the boot. So we're going to change this to greater than 100,000. Okay, so we want high volumes on this list. We don't want any low volumes. So we only want high volumes, because the higher the volume is, the easier you would be able to buy and the easier you would be able to sell. Okay, so I am going to use some examples that I've been using through the week as well, like for instance ABG. ABG would be a good example, which you could have gone and bought. INL, INP, also some. I'm going to use those also as some examples if we don't find anything on this list. So underneath the Sharetrackin 2020, there's only one word that you can use, and that's the word open. Okay, you don't need to enter any other words. You're just going to enter the word open, and it's going to give you a list of shares. Now, obviously, during the week, if you are trading during the week, which would be preferred, is to trade during the week and not over a weekend, because you'll find a long list like this. You can't really shorten this list over a weekend, because you can't add stuff like RSI and stochastic on top of this to make this list even shorter. You will have a long list. Okay, but what it comes down to is, if you take a share, let's say like for instance Ankler Mittal is telling you that you can open a position now, but it's a long position in an upwards trend. Some of them might even tell you to go in a short direction, but most of these are long positions, because the markets are currently turning again. Okay, so if I want to go and analyze the share now, so the filtering is easy. Once again, Sharetrackin 2020, just enter your volume greater than 100,000 and enter the word open, and it will give you a list of shares that you need. Okay, so the filtering is really plain and simple, straightforward for the CFDs. Okay, so all you need to do is select your share. Once again, it's going to give you security details with the name of the company, the code of the company, and a bit of background information. So that's where you're going to do some of your fundamentals on this page, on these security details. And then also your details, for instance, would be also a really important thing to go and have a look at. So the reason I go to this page is to go and compare to, the values between Thursday and Friday, for instance. So we see that the opening price was 735, the highest price was 790, and then the lowest price was 727. Last price is 776. Okay, and then the volume, so that's the volume traded for the day, and then the amount of deals. All right, so volume is the amount of shares that's been traded. Okay, and deals is the amount of transactions that's been done. So a good example of this is if you, for instance, go to a shop and you buy, let's say, a bread and a milk, that counts as 2 volume. Okay, so in your basket you have a volume of 2, or if you buy a bread, a milk, and a butter, okay, that counts as 3 items in your basket. That's 3 on the volume. But if you go to the cashier, then it counts as a deal That's one deal because you're paying one time with cash or with card. Okay, so that would count as a deal, not as volume. Okay, just to set the confusion, to limit the confusion there. Okay, then your change, so that's 51 cents that the share moved with. That is a movement of 7.03%. So it means that the share has gone up. But we need to go and make sure now that that share actually has gone up, and that we can go and open a long position on the share. Okay, so we're going to click on Anchor Middle, go to Chart IQ. So Chart IQ is the bottom here, and we'll open your Chart IQ page for you. Okay, now I can already see a few things on here which would agree with that long. Okay, so first of all, if you missed yesterday's webinar, I will recommend that you go and watch yesterday's webinar as well, so that you can understand how your 5-day, your 10-day, and your 20-day moving average work. But because we're doing CFDs, we're not really going to use the 10 and the 20. We're more or less only going to work with the 5-day moving average. We're not going to work with the 10 and the 20. Okay, we're only going to work with a 5-day. Now, same thing, RSI and stochastic, both of them have a 20% and 80% mark. So anything below your 20, once again, that would be your oversold position on your RSI and your stochastic, and then above your 80 would be your overbought positions. All right, so you would want to buy the share when it's as close to your 20% mark, or below it. Okay, so preferably round about 30% would be your cutoff point, okay, where you would want to buy a share. So currently what we're seeing is, you'll see that RSI and stochastic, both of them have a black line. Okay, so there's a black line on RSI and there's a black line on stochastic. Now those are your moving averages. So your black line on your RSI, that's a 3-day moving average, and your black line on your stochastic is a 14-day moving average. So that basically pulls up on a RSI and a stochastic in a vertical in a horizontal pattern, but to go and give you your buy and your sell indications. Now the red line, that is your buy and sell indication. So when your red line crosses through in a bullish trend, okay, now this is strictly working on all these formulas on the Sharetrackin 2020, works on strictly on a 45 degree turning point. Okay, and also with a 5-day moving average crossing over. Okay, so for instance, like over here, we have a buying indication where your red line is breaking through your black line in a bullish trend. That would be a buying indication. Over here, same thing on a stochastic, with your red line is crossing through the black line in a bullish trend in an upwards direction, giving you a buying indication. So those crossovers, those would be your buying indications. Okay, and also with your 5-day moving average crossing over through that green candle over there, so a big green candle that we've got there, that would also count as a buying indication. Okay, but there are a few extra things that we need to go and have a look at. Okay, like for instance, conversions and diversions. Okay, is it the correct time to actually go and buy the share now? Is there a crossover on the converting or diverting trends? Okay, and also with your trend lines. Now there is of course a video on trend lines that you can go and watch, which would also assist you in pulling up your trend lines, but we're going to quickly go through that as well. Okay, so first of all, what I usually look for on a share is, for instance, I wouldn't buy a equity over there, all right, because that means that the share is still going to go down. So it looks like a really good position to go and buy in, but I won't buy there because why? There's a divergence. Now, what I mean by that is that you've got a buying instruction over here, back here. Now, that buying instruction is higher than what this current one is. Same with this one. That buying instruction is higher than what this one is. So it means it's pointing downwards. Okay, so because it's pointing downwards, it means that the share price is still going to go down. Okay, so I'm going to use that line there. So it's pointing downwards, so the price, it says that the share price is still heading down. Okay, if I look at the stochastic, the same thing. You've got a buying instruction here, but this instruction here, okay, it was almost a crossover, but the lines are just touching. That still counts. Okay, that's also a downward direction, pointing down, so it's a divergence. So you don't want to buy with a diverging trend between that point and that point. You want to buy with a converting trend. So what I mean by on that is that if we take this buying instruction over here with that one over there, okay, that buying instruction is higher than what the previous is. Okay, so this one is low with a higher buy indication pointing upwards. It means that the share price wants to start to turn around eventually. Okay, then with the third one over there, it eventually started to turn around. If I have to pull a line in from there, you'll see that it went sideways for a little bit and now it's starting to turn around because of the 5-day. If I have to take the same line over here between that point and the next point, that's also convergence. Okay, and then on the third point, that third point that it's got there is agreeing with that point over there. So it keeps on going higher and higher and higher. Okay, so that's how your converting trend works. But you can also work with the diverging trend for a breakout. So we can see that we've got one good indication here that's going up, another good indication on stochastic, so that's 2 indications, with a buy there and a buy there. That's 3 indications or 4 indications altogether, with a fifth on the 5-day breaking through. All right, so you've got 5 indications telling you that it's going to go up, but you're going to have a 6th indication as well, and a 7th indication, even if you really want to. But we're going to work with the basics for now. So that's a breakthrough. The price is going to go up because of the 5-day breaking through. Your RSI is crossing in an upwards direction with constant bullish buy indications. So it's giving you a converting trend, and here also constant upwards buy indications. Okay, in a bullish trend, which is good. Okay, the other line that you can pull in is from the point the share price has dropped. So from there, okay, so from this point, which would be that on your RSI. Okay, so this point on your RSI. So you can pull a line in from that point all the way to these 2 points over here. Okay, so you take it from your highest up until over there. Okay, so where those points are, you can even you could even gone like that, but I mean we currently looking at what the current state is. We don't want to go back into the past. Okay, so we're looking at the current state of the share. So I'm going to take it from the highest point since the share has fallen up until the 2 latest highest points, okay, recent highest points, and then that would count as a cone formation. So you'll see that you've got this line going down with another line going up, okay, having a cone formation pointing towards the RSI. You can have the same thing on the stochastic. Okay, cone formation pointing towards the stochastic. Now, you want the share to break out of this cone, okay, either in a bullish or a bearish trend. For a, let's say, a short, you want it to turn around and break through the bottom line. If for a long, you would want it to break through the top line, which it's currently doing. We can see that it's broken through my line. Okay, so that would count as an extra indication that the share price wants to turn around, because you've got a breakout on your upper line. Over here, same thing with your stochastic. You've got a semi breakout. It's a little small breakout that we have down there, but it still counts as a breakout. It's breaking out of this diverging trend. Okay, so that would be diverging lines telling you, basically representing this fall on the share, and that would be your converting line representing the growth on the share. If you look at to go back into the historical data, if you have to take this big growth that the share had here, this would basically be your converting trend between that point and that point. But we'll see that the overall growth was up until more or less, yeah. Okay, so you'll see that the RSI keeps on bouncing on it, goes down, bounces on it, keeps on bouncing on that line until it eventually cracks. It breaks through the line. Like over there was a big breakthrough. Okay, so it broke through over here. It was a little bit of a struggle. It didn't really know where it wanted to go. We can see that on the price as well. It went sideways. Okay, a little bit of sideways motion that it had, and this is representing that. Okay, it's not really breaking through entirely. It wants to come back, goes back down, and eventually it broke through. Now that breakthrough would have been a good selling indication, all right, where you would have sold the share. Okay, but then another indication where you could have read the fall, not only with that, is with the lower indications. Okay, so from that point up until there, for instance. Okay, so it's going lower and lower and lower, and eventually breaking through, telling you, okay, now it's time to sell. Okay, so that would be a breakout towards the bottom. Okay, which this would be a breakout towards the top. Okay, so that would be conversions and diversions, or the simple explanation of conversions and diversions. But mainly you're going to use cones. Okay, so to pull in your cones, first of all, you need a low point pointing upwards. Okay, so from that low point, point upwards towards your higher points. Okay, so to pull in the line, you go to select tool, select your line, click on the lowest point that you have there. Don't hold and drag. All right, it won't work. Don't hold and drag. It's not going to work. Click once and then go to your next point and click twice. That's your 2 clicks. With the next one, click once and then go and click a second time. All right, so that's your upward trend that you want. Then you take from that highest point, so from your highest point here, where it starts to fall, click once on that highest point and then select your 2 or your latest points, basically where it would bounce. Click and then there's your cone formation. Same here. Click there, take it down, click again. Right, there is your bounce. Okay, there was 2 bouncing points, there was only 1 on the stochastic. There's a breakout there, we can see it. There's a breakout and there's a breakout there as well, breaking through your top line. Okay, with a bunch of buying indications going up. So this would be a really good indication for ACL, for instance, to go and buy. So the open position that it's giving us is a true open position. Sometimes you'd find that it gives you open position long, but then it's not correct. Remember that it won't always be correct. Okay, so the software isn't 100% correct on all indications, but sometimes it might read only on the RSI 45-degree angle turn, and not on the stochastic. Okay, sometimes stochastic would still be going down, but it's only reading the RSI because the 5 days broken through. But you want both RSI and stochastic going up, like we currently have. So this is a perfect indication. Another indication that the share price is going to change is if you take a trend line. Okay, so once again, go and watch the video on your trend lines and support and resistance. So we're going to pull in a trend line from this top point, take our highest point there, and pull it down so that we have a few bouncing points. So you'll see that we had a bouncing point there, went up again, bounced over there, went up, bounced, and eventually it broke through this line. Okay, so this line basically is the stoppage. So this would stop your share from growing. So it would your share price would grow, bounce against a line, bounce against it again, bounce against it again, and then eventually break through, which we've currently have. It's breaking out. So we've got a breakout there, breakouts on stochastic, a breakouts on RSI and stochastic. So both of them are breaking out, with your price also breaking out. You'd usually also have a trend line running. Okay, so there's your trend. Okay, so that's your main trend in an upwards direction. So once again, we can see there's a cone there, a cone there. Okay, so 2 cones and another cone here. Okay, so you'd always want that cone formation on your share. Okay, so we've got a trend line there, trend line here, with two on each of your RSI and stochastic. Okay, and these lines would usually represent what's going on your RSI and stochastic as well. Okay, and vice versa. So this would be a really good indication for a buy. So how do we go and buy this share now? All right, or this CFD. So to do that, click on the share or the CFD, go to buy shares, and then go and select your account. So we're not going to buy the new CFD simulation. We're going to go to the webinar one, which we've just created, and you'll see that there's a difference between simulation and your webinar one that we've just made. Okay, so on the normal simulation, you only need to put in the amount of shares that you would want to buy. So if I put 350, for instance, okay, I'll need to more than double that. So let's make 380, even more than that. So over here, for instance, you would have had to buy, just to give you a good indication, 950 shares and pay 7,927 rand. Okay, so that's basically on a normal equity that you would have had to pull out of your own pocket to buy an equity. So 950 shares with a break-even point of 3.98%. Okay, and then you had to go and put in a comment. Now with the CFD one, you've got your leverage and your margin to work with. Okay, now your leverage is going to be 5, which means that your margin is 20%. So let's play around with this quickly so you have a little bit of more understanding. So 1-to-1 is 100%. So it means that you're going to pay 100% of what the price is. So the price is currently sitting on 7 Rand 76. Okay. If I change this to 2, I'm going to pay 50% of the price. If I change it to 3, it's 33.33. 4 would be 25%. 5 would be 20%. And so forth. Okay, so the more shares, or the higher your leverage is, the lower your margin goes. Okay, so eventually when I get to 10, that would be 10% of the share price. Okay, but we're going to work with a margin of 20%. We're going to work it on IG because our software on the CFD side is based um, on IG Markets' brokerage fees. Okay, so you'll see that your total cost, without even giving it a amount of shares to trade or amount of contracts to trade, it will already have a total cost of 50 Rand. So it's 50 Rand for your trade. Okay, it's 50 Rand for your buy, 50 Rand for your sell. So you'd always have 50 Rand in your total cost set already. Okay, so over here we're going to go and enter a number of shares to trade. So let's take 10 for now. So 10 shares would cost us 25 Rand and 52 cents. Okay, so because remember we pay only 20% of the original price. Okay, so if it was a normal equity, if we had to go to simulation and say 10, it would cost us 215 Rand if it was an equity. Okay, but because it's a CFD, we are only paying 25 Rand, but our exposure is 127 Rand. Okay, so 25 Rand and 52 cents times 5 would give you, let's just quickly calculate this. So 25.52 times that by 5 would give you 127. All right, so 127.60. Okay, so that's how it will calculate. So 25 times your leverage would give you a total cost. Okay, so but obviously you're not going to only put in 25 Rand per trade. I mean, that's way too low. Remember, your broker is already 50 Rand, so it means that your brokerage is 25 Rand over your required margin. So you're not really going to make money in a within a week. Okay, so you want to buy more shares. Usually what you would want is on the simulation, and even if you're starting to trade live, anything more than 1,000 Rand is acceptable. So if we want 1,000 Rand on this one, we'll need to put in more shares. So instead of putting in 10, I'm going to go a little bit higher, lower, 700. There we go. So 700 shares will give us a required margin, okay, that we need to pay, that we need to take out, is going to be 1,096 Rand and 40 cents. But exposure would be 5,000 Rand. So once again, 5 times required margin gives you your exposure. So you're not going to pay. You're not going to pay the total cost of 5,000 Rand. You're only going to pay the required margin because the bank is loaning you the extra because of the leverage. Okay, so they will give you a certain marginal price or a certain margin of what you need to fill the order. Okay, you pay 1,000, they give you extra amount to trade with. Okay, but it's not once you go to the bank, let's say for instance Standard Bank, you put in 5,000 Rand or 1,000, it's immediately going to be worth 5,000 Rand. Okay, you need to go and actually physically buy the stock for it to be multiplied by that amount. And remember, if you go through, for instance, Standard Bank, that will change. That would not always be set to a leverage of 5. That might be, for instance, 7. Okay, that means that your required margin would be less. So the higher your leverage is, the less your required margin would be. So if I had a 10, I would only be paying 500 Rand. Okay, but because we're working on a 5, it's going to be 1,000 Rand. Okay, now obviously through IG, your margin percentage might change. So you leverage, they don't give you a leverage, they give you a margin percentage. So some of the shares would be like 35% margin. It means that you're paying 35% of what the price is. So your leverage would be, for instance, like 2.86. So they have got really low leverages on IG markets. If you're going to go and trade through IG, you must know that your leverages might go as low as I think the lowest that it can go is 75% on your margin, but it means that you need to go into the millions, which you need to basically pay out of your pocket, which will give you a 1.33% leverage. But I mean, I think the highest that you would really want to go is like 45%. So some shares, so it scales. Okay, so it works on scale. So it's first it goes on 20%, then it goes to 35%. The more money you pay in, then it can go over to 75%. Okay, so 20%, 35%, 70%, and some shares even start off at 35% if you go through IG. Okay, so I will go and show you in Monday's webinar where to go and find that margin percentage. Okay, but leave it at 20% for now. Okay, because we're working with the simulation. Okay, so then you just need to go and add your comment. Why is it that you are buying the CFD? So you can go and into your comment. So it needs to be, once again, technical and fundamental, same as the previous training session with the equities. You need to go and put in your comment. Why is that you're buying the share? So either two technical or two fundamental reasons. Technical reasons on this one, there's a lot. Okay, first technical reason is that we had the advisor told us that it's an open position for a long. That's one reason. Second reason is that we have a bullish a bunch of bullish buy indications in a converting trend on RSI. Second reason would be we've got a converting trend on stochastic. We've got two breakout points, one on RSI, one on stochastic. There's another breakout point on our main price. So you've got a bunch of reasons already here right in front of you telling that you can put in your comment block. Okay, so you would say there that in this case, RSI and stochastic both breaking through the diverting trend are also giving buying indications, and also the price is positive and breaking through its overall its current trend. Okay, so that would be decent buying comment. Don't go and say share is doing good, CFD is doing good, price is positive. That's not a good reason. You need to go and put in a decent reason why you're buying the share. That might be fundamental or technical. Now, fundamentals, once again, you go to research. At top left-hand corner, go to research and do some research underneath market news. Go read up on the share. See what's currently happening on that share. If you don't find anything on here, you can even go to Google. You can go to Google, for instance. What I do is I go to Google, I take the code, first of all, ACL JSE news. That's all you need to do. Just replace the code each and every time. So ACL JSE news, click on news. Right? Go to Google and go and read up a bit. See where's the latest news. There's news from 2 weeks back. Some of the news might be old, but if there's nothing there, you can't really go on the fundamentals. Okay, so but fundamentals are also a really important thing, because that also chooses the direction which the share is going to go, especially if you're going to go a little bit more long term. Okay, so you can go and do fundamental analysis also to see is this a really good place to buy now. But I mean, you've got so many yes indications, why not buy? Okay, so fundamentals at this stage is not going to matter, because if you've got a bunch of technical analysis telling you that this is definitely going to go up. Okay, so then you put in your comments. I'm just going to put in test for now, and then you can say either open long or open short. So if the share was a short position, okay, so if the share, for instance, turned around and it broke through this bottom line here. Okay, so if it broke through this line in a downward direction, that would have been a short instead of a long. Okay, same if your RSI decided, okay, now listen, I'm not going to go through the top line, but I'm going to go through the bottom line. That would be indication for a short. Same on stochastic. If it breaks through the bottom line, it would be indication for a short. Okay, for a downward direction, so you would be making money in a bearish trend instead of a bullish. Okay, but because it's turning up, we're going to go and say open long. And it's going to open the position for us. So now when I go to my dashboard, trader dashboard, and I click on my webinar one, we'll see that there is the CFD that we've just bought. So there's the code, the direction, the quantity that we bought is 700, unit cost. Okay, so 7 Rand 76. The margin, so 1,000 1,046 rand and 40 cents. So that's obviously with brokerage. Remember, when we went to the buy, you'd see that it was just below on our required margin, was just below 1,100 rand. Now it's above 1,100 rand because why? 50 rand has been added on our margin. Okay. Then current price, so that would be a current price, which with the price is currently listed at. Unit cost, obviously, if we go to our previous page over here, you see that unit cost will always stay the same. All right, that would never change. Okay, so it's your current price that changes. So once your current price is higher than your unit cost, then you would know, okay, I'm starting to make profit. But also keep into consideration, if we take, for instance, these shares that I have here, okay, I still need to pay the selling fee. So in actual fact, if we look at INL, I haven't made 266 rand. I've made 216 rand on that share because I need to deduct the 50 rand. Okay, same with INP. That one would not be 298, it would be 248 because I need to deduct the 50 rand. Okay, once I sell out the share. So always keep that into consideration before you sell a share. So even if it says that you got 50 rand profit, that 50 rand profit ain't yours, it's still the bank's. Okay, because you need to pay that back to them once you sell. It means that you just broke even. Okay, you're just getting back whatever you put in. Okay. Um, then you same thing once again. Today's movement, that would be yesterday's movement, and then overall move. Overall move, we haven't done anything yet because we just bought the CFD. If we want to go and sell the CFD, let's say we made profit on it, we're happy with the amount of profit, or we lost on this contract, we can go and sell it. Okay, so we can go to action. So first of all, before we do that, that would be on this closed position, you can go and set up your target value and stop loss. Now, currently, it doesn't really do anything, doesn't send you SMS or anything. It does tell you setup of SMS notification not allowed on CFD accounts. That is going to change very soon. Okay, so within the next couple of months, that is going to change, so that you'll be able to receive SMS notifications for CFDs as well, or even push notifications. So we're starting with push notifications, like what WhatsApp and Facebook does. Once you get a message or something new happens on your Facebook, it pops up on your phone and just goes back up to the top of your screen. So we're going to do more or less the same thing with an application. Okay, but for now, currently, you can go and set it, but it's not going to do anything. So you can go and say target value of, let's say, 10%, but a stop loss of 5. But this is really important, okay, the stop loss. So especially if you're starting to trade live through Standard Bank or IG Markets or Nedbank or through FNB, your stop loss is really important, okay. So a 5 to 7% is more than enough on a stop loss for a CFD. Don't go lower than 5%. Don't kick yourself out of the market too early. So if you put in a 2% stop loss, 2% is nothing, okay. So a share can drop by 2% within a blink of an eye. All right. So if it drops by 2% within the next hour, it sells out. You not only losing your brokerage of 50 rand, you're losing money as well. Okay, because you set your stop loss too low. All right, you want your stop loss to be a little bit higher. Okay, so if you're trading through IG, you would set up a stop loss and a trailing stop loss, or if you're going through Standard Bank and stop loss, you would set up just a trailing stop loss. Okay, so but that we'll get to on Monday. All right, but stop loss, very important, 5% to 7% on a CFD is more than enough. Equity, 10%. I mean, it's a long-term investment, so a share can drop within one day, let's say, or a few days to 8% and start turning around again. Okay, because it's a long-term investment, you're not really going to worry about a big stop loss. Okay, but you'll still have a trailing stop loss on it in any case. And then target value, don't be too greedy. Okay, same rule applies. Don't be too greedy. If it reaches 10%, go and do some analysis, see if the share can go up even further. Now, on equity, you would hold onto a share, let's say 3 months to 6 months to a year to 2 years, 3 years, 5 years, 10 years, depending on how long the share grows. Okay, but with CFD, it's a week to 2 weeks. Okay, because of your margin, your leverage is being so high. Remember, your percentage growth is multiplied as well. So it won't be like, let's say, 1-to-1 if it goes up by 10%, as I explained here. I mean, yeah, 10% is only 100 rand. Over there, 10% is actual 500 rand. Okay, so you can make 500 rand really quick, or you can lose 500 rand really quickly. So the percentage growth is higher than what you would be gaining from an equity. Okay, that's why you would only be keep holding on to it for a week to 2 weeks, because if it starts to turn around, let's say you trade it with the share within this period of a year, so there's a little bit over 2 weeks, but you had to go and sell out there or either here, just where it dropped, because your stop loss would have taken you out. So if you had a, let's say, 5% stop loss, it would have taken you out there or just a little bit lower. But you would have bought here, sold there, and you would have had a good percentage growth. But if you don't have a stop loss set on it, the percentage that you're going to lose is going to be drastically higher than what an equity would be. Okay, you might lose everything. You might lose the entire margin that you put in, and if you lose your entire margin which you put in on, let's say, IG, they close the position for you. Okay, because you lost everything on that. It's not like with the equity where if the share falls below whatever you put in, um, you can still hold on to it because it belongs to you. It's going to go back up eventually. Okay, but with a CFD, you can't argue like that. It's not going to go back up eventually. They sell it out for you. They get rid of that transaction for you. Okay, they close the position. That's why it's so important to set up a decent stop loss. Okay, so always remember 5% to 7% is more than enough for a CFD. Okay, don't go too high as well, because I mean 10%, I mean 500 Rand or 5,000 Rand. Okay, so 5% stop loss to 7% is more than enough. Okay, just click on update values and it will update to that stop loss for you. But it's not going to, as I said, it's not really going to do anything as of yet. If you want to close the position, just go to the same share, click on action, go to close position, and then there in the comment block, once again, enter your amount. Oh, sorry, your comment. Why are you selling? All right. So this time, it might be because your stop loss has been reached, or your gross stop loss has been reached, your target value has been reached. You're happy with the profits, but use technical terms. Go to your charting. Look at your charting again. Don't say share is doing bad. Okay, or share has fallen. We need these. Why has the share fallen? Okay, what happened to the share? Like, for instance, your stop loss has been reached. That's one technical comment. Okay, you don't need two technical comments or two fundamental for your sell. You need one technical, one fundamental for your sell. Okay, but once again, as I said, decent comments. Okay, so I'm just going to use test for now and then just say close position. So first of all, go to action, click on close position, fill in your comments and click on close position again, and then we'll close that position. All right, then we'll sell out. Okay, so now we can see we didn't make anything, we lost money. Okay, because we paid 50 Rand for a buy, 50 Rand for a sell, so we lost 100 Rand on that CFD. Okay, so that's the basics of CFD trades, on how to go and select a share, how to analyze your share, how to go and buy your share. But there is a few shares that I would like to go and show you which had more or less the same movement. If we go and look at RNI, RNI had the same thing, which had a buy indication with a higher buy indication, and it had a really good upward trend. So we bought that on the 10th. So the 10th would be right over there. Sorry, right over there. That would have been the buying point where we bought in on those shares. Okay, right on the 10th. So we had a converging trend between that point and that point, between that point and that point over there. There was our downwards, basically our downwards trend. So there was the breakthrough with the 5-day moving average going upwards. And also another thing, we still had a bullish momentum straight up from there to there. Over here, we just had a cone formation, also still pointing up, but there was a breakthrough, obviously, breakthrough right there. And also, if I had to take a line from there to there was a breakthrough right there as well. Okay, so we had a few breakthroughs, so that's why we chose R and I. If we have to go and look at INP, same thing, take a line, draw it directly on that. There's a breakthrough right there. Um, Obviously, we bought it on a more risky situation, but we had a breakthrough. If we have to look at that over there, there's a breakthrough right over there. Okay, with a buying indication. So yeah, we took a little bit of a risk with a downwards trend. Okay, but we had a breakout, which might mean that we might have a little bit of a spike going up. But the 5-day had the buying indication. Same year, we had those points. agreeing with that buying indication over there, crossing through, but also a little bit risky. So we did take a bit of a risk, but we made almost 300 Rand so far on INL and INP. Both of them have more or less look the same because the same company. So INL, go and look at INL, we'll see the same thing. Okay, so the charting might look a little bit different. There's a slight price difference between the two. ABG, same thing. If you look at ABG, APSA Group, so APSA Group Limited, that was the trend. There was the breakout. Okay, so we also took a little bit of risk. Once again, there's a buying indication, but you'll see we had a bullish, more or less a horizontal, not even bullish, was more horizontal. Okay, but there was the bullish indication, right? Also with a breakout on that bullish, right? Meaning that it wants to push further, and then from this drop point, once again, drop point line from there to there was the breakout. Okay, so breakout and it broke through, and the price also broke through this line, which means that it's ending this downward trend. Okay, so you can see the pattern that we're following. Okay, so sometimes it does help taking those little risks in between, but you would essentially want bullish trends. But we won't send you shares that we don't trust. I mean, if it's a share like ABG, for instance, ABG part of the top 50, INP and INL, top 40. So INP, INL, RNI, ABG, those shares, we chose top 40 shares. All right, so you always have good shares that we choose. We don't choose random shares out of the blue. We go through the top 40 list, analyze those shares, and choose shares from that list to send you the notifications. And that's why you need to join the Telegram group. All right, really important. Go and join the Telegram group so you'll be able to get good opportunities like this. Okay, so once again, if you want to join it, send me a mail, rudy@sharetrackin.com, RUDI@sharetrackin.com, or media@sharetrackin.com with your name, surname, contact number. It's all I need. I can just add you onto my contact list and just add you onto the Telegram group, and then from there you can just follow on what the share performance is so far for the shares that we put on the stock picks. Okay, so from next week onwards, and not this coming Monday or this coming Tuesday, next the Tuesday after that, we would be starting full blown with some a new bigger idea that we've got with CFDs, more or less with the same principles, but with extra lines, like for instance your crossover on your bearish, like for instance your support line. So for instance, a breakout on a support line would be a really good sell indication, or a breakout on a resistance line would also be a really good buying indication. So things like that we're going to incorporate extra. Okay, not only these lines, we'll incorporate other things as well in between. Okay, so that's it for the CFD video. I thought it's going to take a little bit longer, so it only took us like 57 minutes, but sometimes I find it a little bit easier to explain things in English than in Afrikaans. Okay, so you're more than welcome. Any other questions that you got, go to contact us, give us a ring on our support numbers, either 08203 number, or give us a call on the head office number. They can put you through to us, or send us email to info@sharetrackin.com or support@sharetrackin.com, and we'll be able to answer any questions for you. So Monday we are going to go through easy equities and through IG. So if you want to see how to open an investor account or a trader account through easy equities or through IG markets, more than welcome to go and have a look at Monday's webinar as well. So I hope you guys have a wonderful afternoon further, and then we'll speak on Monday again.